China's reopening could come with an unexpected negative side effect for the global economy, and that would be one of a giant $720 billion inflation bomb. Now, many people talk about how China's reopening can help contribute to global growth, but one of those things in the age of fiat is prices going up. But as I always say, you have to bring it down to the mechanics and ask, by what mechanism would this be pushing prices up? Because all else being equal, if the money supply doesn't go up, what mechanism is pushing prices up? Because if you want to see prices of one thing increase, but on net there's not more money being created, and that means people have to spend less on other things to divert more of their income to that one thing whose prices are going up. That can certainly happen, and that can be a mechanism by which one thing's price goes up. But if you notice across the board, the price of basically everything is going up. The only way that can happen is if there's more money being injected into the system. Or is that the only way? Because we know that culture makes a big difference. Now, I've mentioned in the past about the reason why Japan hasn't had a lot of the inflation over the past 2 decades that the United States has seen, despite the central bank there being far more easy and injecting a lot more money into the system. Well, when you look at the total net effect of how much money is actually in circulation, there's not as much of a growth in the money supply there. The reason for this is because people are savers in Japan, and over the last few decades, they've saved and they have deleveraged. And so any push that the central bank has tried to cause inflation has fallen flat. Very different from the culture in America, where we are leveraged up to our eyeballs and spend everything down to our last cent. A recent survey showed that 2 out of 3 Americans could not cover a $400 emergency right now. Now, obviously, this wasn't the case during 2020 and 2021. Americans were flush with cash, but instead of deciding to save it for a rainy day, meaning a bust that normally follows an artificial boom, Americans decided to spend it all, leveraged up to the hilt, and now can't even cover even a $400 unexpected expense. Contrast this with citizens in China who have been spending the last few years increasing their savings. This is where culture makes an absolutely huge difference, that over the last couple of years, as Chinese citizens have been locked down and prevented from engaging in economic activity and social behavior, they've been saving their money, and now many economists are saying that could contribute to growth, but could also bring some unexpected pent-up demand that could shoot prices higher. I mean, just look at just the year of 2022 compared to the prior 2 years, how much the net increase in China's household savings have been. One side effect of this is that it could very easily have a huge upward pressure on commodity prices. In the beginning of 2020 and 2021, we saw commodity prices skyrocket because if demand increases, then the demand for the stuff that's used to make those things also has to increase. And because the production and the mining of those base materials, those commodities, is relatively inelastic. It takes a very long time to bring new mines on board and start producing new commodities. That means the only other way for the market to respond is for prices to shoot through the roof. This is why the price of lithium has increased so dramatically over the last couple of years. Because due to a greater interest in driving electric cars, people buying more and more electronics full of batteries, and for a larger regulatory push by Western governments around the world to have this green movement and try and accelerate a sustainable, renewable energy future, we are seeing massive supply and demand mismatches between the commodities that are necessary to get there and what we actually have being produced. My friend Jim Lewis over at Wall Street Silver recently tweeted about how copper needs to increase its production to be able to achieve a global green future. Elon Musk saw this and he corrected it in saying, no, it's not copper that is required, but lithium. Lithium refinement needs to increase dramatically. Again, because this is the commodity that is necessary for all battery tech. And if you're gonna have everything powered by electricity, you've got to have somewhere to store that electricity, which right now is lithium batteries. Now, Peter Schiff and Josh Crum both weighed in on the debate, both claiming that actually copper production would have to go up if demand for it goes up due to EVs and other green tech. But the bottom line here is that we still have a massive supply and demand mismatch between the commodities that we have and the commodities that we need for the future. And so as demand picks up, we cannot ramp up production as fast as demand is increasing. That means the only thing that can happen is prices respond accordingly. Now, proponents of this shift to fuel the EV industry growth are saying that high lithium prices are actually a good thing. Basically, if lithium producers are able to increase their profits, they have more cash to be able to reinvest and increase their production. And if we want to be able to increase battery storage and provide the batteries for this move to green tech and renewable energy in the future, it is an absolute necessity to dramatically increase the amount of lithium production there is. And until we get there, the price of lithium and the profits for lithium miners will continue to increase. The evidence is in the recent history, with lithium prices doubling in the past year and being up about 9-fold in just the past 3 years. Even with this price increase, the lithium market is tighter than it was the year before, because even though there's more supply coming online, there is even more demand. This puts companies like TELHF, the sponsor of today's video, in a perfect position to be able to profit off of this by positioning themselves to take advantage of this continuing supply and demand mismatch by snatching up properties left and right. CEO Morgan Lekstrom is on the move, making mergers and acquisitions and purchasing properties here left and right. They recently signed an option agreement to acquire the Shelby properties. These are located in the James Bay region of Quebec, which are owned by this company, which currently has a market cap of $1 billion and has recently experienced massive gains due partly to the property located next to the ones that TELHF just acquired. And most recently, the big one here is that TELHF just started a joint venture with BlackRock Silver for the Gabriel project in Tonopah, Nevada. Now, you guys might remember last year I was actually on site with BlackRock Silver in Tonopah, and I've been there myself. And so this company TELHF is partnering together with them for the lithium property that is there, which is great news for TELHF because grades have averaged 28% higher there after the partnership and the options were purchased. CEO of TELHF, Morgan Lekstrom, said that these improved assays, they not only confirm the discovery that BlackRock Silver made, but they expand the cutoff mineralized area significantly. It's proof that having a team of experts that have been involved in clay lithium for decades has proven invaluable to give them an advantage. And they really do have a fantastic team here. Specifically, if we look at Julie Selway, she's the VP of Exploration. She's a globally recognized expert on lithium. Not only her, but their director, Lindsay Bottomer, has over 45 years of experience international mining. He's also overseen some of the biggest mines currently recorded, which is why CEO Morgan Lekstrom is going on the hunt and buying up properties left and right and options to acquire properties left and right, because he's got the team around him to be able to pick out potential winners better than most. TELHF is cashed up. They're ready to pounce. It's very similar to buying a fund that's constantly buying more stocks. This is a company that's constantly buying more properties with the goal of starting drilling, finding better than expected results, and then either selling that property to somebody else for a huge profit once they know it's actually in the ground, or turning that mine into production themselves. The two major projects, the Shelby properties and the one in Tonopah, Nevada that I talked about earlier, these are right near companies. They already have properties in Ontario that are right next to properties that other companies own that have turned these other companies into $400 million to $1 billion companies in less than a couple of years. Given the current supply and demand mismatch between how much lithium there is being produced right now and how much faster the demand for that lithium is going up, the price looks like it's going to continue to get squeezed higher and higher, which means that the companies that own properties that have lithium become more and more valuable as well. This is not investment advice and it is not a trade recommendation. Do your own research before making any financial decisions. And as always, really appreciate you guys. Thank you so much for watching. Have a great day.